Greetings everyone and welcome back to the lesson. The subject is Advanced Management Accounting. Today we are going to start on a new topic known as Environmental Management Accounting. This topic has two subtopics. One, the role of accountants in managing and accounting for environmental costs. Two, use of management accounting techniques in identification and allocation of environmental costs. And in studying the techniques, we look at the inflow-outflow analysis, number one. Number two, flow cost accounting. Number three, environmental life cycle costing. And lastly, environmental activity-based costing. And candidates will recall in our first chapter where we considered or discussed the scope of management accounting, the scope of strategic management accounting. We said that environmental and social aspects are considered in strategic management accounting while making decisions. So environmental management accounting falls under the scope of strategic management accounting. And today we're going to study in detail the topic environmental management accounting. And the first subtopic is the role of accountants in managing and accounting for environmental costs. But before we get into highlighting the role of accountants, it's important for us to understand, first of all, the meaning of environmental costs. Then, in this lesson, I will give a brief adumbration of environmental costs. So that I'll do here on this page. I'm going to give a brief summary of environmental costs. But firstly, candidates, environmental costs are the financial implications of an organization's activities on the environment. That's the meaning of environmental costs. Environmental costs refers to the financial implications of an organization's activities on the environment. And these costs can be categorized as follows. First of all, I've said that environmental cost refers to the financial implication environmental cost refers to the financial implications of an organization's activities on the environment. And these costs can be categorized into three. The costs can be categorized into three parts. One is direct environmental costs. Direct environmental costs. So the costs can be categorized into three types. The first type is direct environmental costs. Now, direct environmental costs are the costs directly associated with preventing, minimizing, or remediating environmental damage caused by an organization's operations. Do you understand? Direct environmental costs, I repeat, are those costs that are directly associated with 1, preventing, 2, minimizing, and 3, remediating the environmental damage that is caused by an organization's operations. Examples could be waste disposal costs, waste disposal costs, waste disposal costs. These are, for instance, the fees for landfilling, the fees for recycling waste generated by an organization, and so on. Waste disposal cost is an example of a direct environmental cost. Then we have pollution control, costs. Pollution control costs. These are expenses incurred for installing and maintaining pollution control equipment such as air scrubbers, wastewater treatment facilities, and so on. Environmental cleanup, environmental cleanup costs. Environmental cleanup costs are expenses associated with cleaning up, say, contaminated land, cleaning up water, or even air resources due to past or ongoing operations. Environmental cleanup costs. Do you understand? Resource consumption, resource consumption costs. Resource consumption costs are costs of raw materials, costs of energy, or even water usage that have environmental impacts. Environmental compliance costs. Environmental compliance costs are costs like fines, costs like penalties that are incurred for violating environmental regulations. That's another example of a direct environmental cost. Then B, we have indirect environmental costs. Indirect environmental costs. What are these indirect environmental costs? Now, indirect environmental costs are the less direct costs. They are not direct costs, but are significant costs that arise from the environmental impacts of an organization's activities, such as loss of productivity, a good example is loss of productivity due to environmental disruptions. Loss of productivity due to environmental disruption. These are costs associated with the employee illness, costs associated with the employee absenteeism, and even reduced productivity as a result of environmental hazards. All right? Loss of productivity. This is productivity of the workers because of environmental hazards that are occasioned by an organization's activities. Damage to brand reputation or company's image. That's an indirect cost. Damage to brand reputation. These are costs associated with the negative publicity and also reputational damage due to environmental incidents or unsustainable practices. Damage to brand reputation. Number 3, loss of biodiversity and ecosystem services. Loss of diversity and ecosystem services is an indirect environmental cost, and these are costs associated with the depletion of natural resources. These are costs that are associated with the loss of ecosystem services that support human life and well-being. Climate change impacts. Climate change impacts are costs associated with extreme weather events, rising sea levels, and other climate change related disruptions which could affect infrastructure, which could affect operations, and which also could affect supply chains. So these are 4 examples of indirect environmental costs. The third type of category, we've highlighted 2, that is the direct costs and indirect costs. The third category is what we call intangible environmental costs. Intangible environmental costs. Intangible environmental costs candidates. These are the long-term and the non-monetary costs that are difficult to quantify but can have significant consequences for the environment and the society. And that may include loss of biodiversity, loss of biodiversity, including loss of species and species extinction and species extinction. These are the long-term impact of diversity on loss of ecological balance and also the potential for future discoveries of valuable resources. That's an intangible environmental cost. Climate change effects. Climate change. Climate change effects, and these are effects on human health and well-being. Climate change effects on human health and well-being. This is an intangible environmental cost. Climate change effects on human health and well-being. This is simply the potential impact of climate change on public health, on food, on security, and also migration patterns. Do you understand? We are discussing human health and well-being. The human life, we all know, is pegged on food. Security is pegged on health, and so on. So there are certain activities that can endanger human life, can endanger human health and also well-being, and that is classified under the intangible environmental costs. Three, loss of cultural heritage. Loss of cultural heritage is an intangible environmental cost. Cultural heritage. And this may also include indigenous knowledge. Indigenous knowledge. Loss of cultural heritage and indigenous knowledge. This is the impact of environmental damage on cultural sites, on historical artifacts, and traditional knowledge patterns and systems. That's an intangible environmental cost. Now, having analyzed environmental costs, because what I've done here is not part of the syllabus, but I thought it's important for us to understand what are these environmental costs, because the first subtopic requires us to study the role of accountants in managing and accounting of environmental costs. So before we get into the role of accountants, it's important, it's crucial that we understand what are these environmental costs. And in defining environmental costs, I've said that environmental costs are the financial implications of an organization's activities on the environment. And these financial implications, we've categorized them into three types. The first one being direct environmental costs. We've highlighted 5. Are they 4? 4 direct environmental costs. That is wastage or waste disposal costs. We have pollution control costs, number 3. Environmental cleanup costs, number 4. Resource consumption costs, number 5. Environmental compliance costs. Then we've gone ahead to highlight the costs associated, what we are calling the indirect environmental costs. Indirect environmental costs. These include loss of productivity due to environmental disruptions. This is productivity on the workforce. Then we have damage to brand reputation. Number 3, loss of diversity, biodiversity and ecosystem services. Number 4, climate change impacts. Then the last category is intangible environmental costs. The first example is loss of biodiversity and species extinction. Number 2, we've identified climate change effects on human health and well-being. Number 3, loss of cultural heritage and indigenous knowledge. These are examples of intangible environmental costs. Let's now study the role now of accountants. What is the role of accountants in managing and accounting for these environmental costs? Role of accountants. what is the role of accountants? And as you are going to see candidates, the accountants play a fundamental role in managing and accounting for environmental costs within organizations, within their organizations. And their role extends beyond the traditional financial accounting to encompass environmental accounting practices. So we're going to highlight some of the roles played by accountants in managing and accounting for environmental costs. Number one, cost identification and classification. Identifying the costs, classifying the costs. That's the role of the accountants. And these are costs associated with an organization's activities, okay, which could include costs related to pollution control, costs related to waste management, costs related to compliance, costs related to resource consumption, costs related to waste disposal, costs related to loss of productivity. Identifying, number one, the costs, then classifying the costs. It could be costs related to energy consumption, sustainability initiatives, and so on. So the first role that the accountant plays is to identify the costs, then classify the costs. That's role number one. Role number two is to measure and report. Cost measurement and reporting. After identifying the costs and classifying the environmental costs, then the accountants help in measuring the costs. They help in reporting the environmental costs. They develop systems to measure and report environmental costs accurately, and that may involve quantifying. And this is quantification of expenditures on environmental activities or on what we call protection measures, assessing the impact of environmental activities on financial statements, and that may also include integrating such information into financial reports. Cost measurement and reporting. That's a key role played by accountants in the management and accounting of environmental costs. 3, life cycle costing. Life cycle costing. Accountants here utilize life cycle costing methods to evaluate environmental impact of products or processes throughout the entire life cycle. Throughout what? Their entire life cycle of this course. And that helps in assessing the costs incurred at various stages, including the extraction stage, the production stage, the distribution stage, distribution use, and even disposal. And at each stage, the accountants consider the implications of such activities. They consider environmental implications at each stage. We are talking about life cycle costing. That is a work of accountants, utilizing life cycle costing methods to do what? to evaluate environmental impact of products or even processes throughout their life cycle. Life cycle costing. 4 is what we call environmental performance measurement. Environmental performance measurement. Environmental performance measurement. Environmental performance. Now, here, the accountants design performance metrics and key performance indicators, and the purpose for such indicators is to assess the effectiveness of environmental initiatives and also to monitor the organization's environmental performance. And that allows for continuous improvement in sustainability efforts. Environmental performance measurement. They help measure environmental performance. 5, compliance and risk management. Compliance and risk management. Here, candidates, the accountants ensure compliance with environmental regulations by monitoring and managing risks associated with the non-compliance. And the accountants do so by assessing potential penalties, by assessing potential liabilities resulting from environmental violations, and they also incorporate such risks into financial planning and risk management strategies. Compliance and risk management. That is yet another role played by accountants in accounting for environmental costs. 6, environmental management systems. Environmental management systems. Accountants may contribute to the development of and also the implementation of environmental management system frameworks. They may also help in alignment of environmental objectives with overall business goals. And here the accountants integrate environmental considerations into strategic planning and decision making processes. All right? And if you recall, this is what we studied in our first chapter in strategic management accounting, where we mentioned the fact that strategic management accounting goes beyond the traditional financial accounting processes to incorporate the social and environmental aspects. So this is how it's actually done. The accountants integrate environmental considerations into strategic planning and decision-making processes, because you need not to forget that management accounting is a tool, or is a tool that the management uses to gather information, to gather data, to gather analysis and insights that can support the development and also the implementation of strategic goals of an organization. Do you understand? Environmental considerations into strategic planning. This is role number 6. I'm going to page 3 for role number 7. The 7th role of accountants in accounting for environmental costs is sustainability reporting. Sustainability reporting. Accountants participate in preparing sustainability reports that disclose environmental performance, that disclose initiatives and commitments. And these reports often include environmental accounting disclosures that provide stakeholders with transparent information about the organization's environmental impact. Sustainability reporting. 8, cost benefit analysis. Cost benefit. It is the accountants conduct cost benefit analysis of environmental projects or even initiatives in order to evaluate the financial implications of adopting environmentally friendly practices. And this cost benefit analysis aids in decision making by assessing the economic viability of sustainability investments or sustainable investments. Do you understand? Cost benefit analysis. So these are 8 points to demonstrate the role of accountants in managing and accounting for environmental costs. The first role is cost identification and classification. These are 2 roles in one. Cost identification, then number 2, environmental cost classification. Then in point number 2, we have cost measurement and reporting. These are again 2 roles in one. Cost measurement and cost reporting. Number 3, life cycle costing. Number 4, environmental performance measurement. Number 5, compliance and risk management. Number 6, environmental management system. They help in the development and implementation of environmental management systems or frameworks. They integrate environmental considerations into strategic planning. Then number 7, sustainability reporting. Sustainability reporting. Accountants participate in preparing sustainability reports that disclose environmental performance and initiatives as well as commitments. Then lastly, we've said they conduct cost benefit analysis. They evaluate the financial implications of adopting environmental friendly initiatives or practices. So candidates, that is it. We've come to the end of the lesson, and it's important to note that by integrating environmental considerations into financial and management accounting practices, the accountants contribute to a better environmental management. Right? They contribute to better environmental management. They contribute to the practice of promoting sustainable business practices, and they also provide stakeholders with valuable information regarding the environmental impact of an organization's activities. So that's the end of the lesson, but as it is our custom, I'm going to read to you revision questions on the role of accountants in managing and accounting for environmental costs. The first question is, how do accountants play a pivotal role in identifying and managing environmental costs within organizations, and what strategies can they employ to integrate these costs into financial reporting and decision-making processes? Number 2, discuss the specific responsibilities of accountants in developing strategies to reduce environmental costs while ensuring compliance with regulations, and how do these efforts align with broader corporate sustainability goals? And how do these efforts align with broader corporate sustainability goals? That's number 2. Number 3, in what ways do accountants contribute to assessing the environmental impact of organizational activities, and how can they collaborate with other departments to mitigate these impacts while maintaining cost effectiveness? Thank you for attending the lesson. God bless you. Ensure to do the assignment, and when doing the assignment, try to rely on your memory first before looking at the notes or the video lectures. Thank you. God bless you. Bye-bye.